Ever heard of trillion parameter AI models? HPE just launched their liquid-cooled Blackwell GPU racks, making everything else look like child's play. With $1.1 billion in orders already, the Nvidia AI Computing by HPE stack is ready to dominate data centers. But the real question is, can they maintain those margins? Watch the full video to discover the 3 dynamics that will make or break this AI server revolution.
The first one, is a company that I followed for 30 years. Actually, at one point, had over $250 million short in one of my funds. Hewlett Packard Enterprises, teaming up with Nvidia on power AI servers. Why don't you jump into it, and then I'll share some perspectives that I have, having been one of the largest short sellers in the world in Hewlett Packard for the better part of 3 or 4 years.
I got to tell you, having $250 million short position in a tech company requires a lot of chutzpah. Anyway, so here's the news on this one. At its Discover event, Hewlett Packard Enterprise announced a new generation of AI servers built around Nvidia's high-end Blackwell GPUs. Their systems include rack-scale configurations like the GB200 NVL72. Take notes, that is going to be on the test. Those rack-scale configurations are liquid-cooled. They're designed to handle trillion-parameter AI models. There are some smaller, less expensive versions as well. The key news here is that these all depend on NVIDIA AI computing. And so what it does is that it embeds NVIDIA's solution into everything HP is doing. These systems are targeted at enterprise, sovereign, and cloud computing provider customers. And the platforms are trying to simplify deployment of AI workloads, which is actually something that makes a lot of sense. To give you a sense of the scale here, HPE reported over $1.1 billion in net AI server orders, just 4 times Enrique's previous short position. And the pipeline here totals $3.2 billion. There's pent-up demand. And when you take a look at the written version of the 5 things, there's a chart here showing expected growth in this. Sorry, I said expected growth. I actually meant historical growth. The numbers here are just jaw-dropping, the amount of increase in AI usage here. So, Enrique, what are your thoughts on this partnership between HPE and NVIDIA?
Well, look, I think it's very interesting. People maybe don't understand enough the dominant or large position that some of our legacy technology companies like IBM, like Hewlett Packard, have in technology implementation for larger corporations. And so I think that there's an opportunity for this to be great for HPE stock, but there's a big problem, and that's earnings revisions. So, IBM has been an absolute superstar stock. I mean, I'm looking here at the chart. IBM's gone from 120 to 290 since 2023. But the reason, and IBM I had over $500 million short, by the way, back in the day. I was a pretty big short seller.
But not the last 2 years.
Yeah, no. So the nice thing was like being short. This is 10 years ago. It was IBM and Hewlett Packard. They're big, they're liquid, they were at negative earnings revisions, and it's not like they were going to get bought out any day. Anyways, with IBM, what happened for IBM is the negative earnings revision stopped. And so earnings went for this year only from 1030 to 1090, and the stock doubled. Okay. Now, there's other things going on there, but the problem for HPE is I'm looking at the same chart, and earnings for this year have gone from $2.35 to $1.80, right? So they've dropped 20-30%. So the most recent earnings revision was a positive one. I'm going to tell you something. If HPE can translate this into positive earnings revisions like IBM, I see no reason why the stock can't do fantastically. And by the way, when I look away, I'm looking at my Bloomberg. And to put this in perspective, hold on, this is amazing. The multiple on fiscal year 26 for HPE is 9.7 times EPS. The multiple on IBM is 25 times. So what I would say is this is a good start. I would watch the earnings revisions like a hawk, and it might take them 1 or 2 quarters. You haven't missed anything. They're going to report again on September 4th. But if they can pull an IBM, this stock's a double or a triple. If they don't, it's dead money. It's all about the earnings revisions for this company, in my opinion.
All right, so here's my interesting follow-up for you on this. Given that I don't know that there's anything particularly special about the HPE racks, and yeah, sure, there's a legacy business there, but the big news here is it's NVIDIA's architecture, the NVIDIA Blackwell chips in these. That's great for NVIDIA, right? The more they are embedded in these big legacy hardware producers and distributors, the better off NVIDIA is going to be. But you have to figure it's going to cost HPE something on the margin side. So there's a possibility we could see a lot of revenue growth here, but not necessarily as much earnings growth as margins get compressed and NVIDIA grabs a gigantic share of the shared profits.
I think it's a great insight, and this is why when I was a younger investor, I spent a lot of time predicting and trying to position before the weight of the evidence. And I became a much more successful investor when I decided I was going to wait for the proof to begin to elicit itself. And the quickest thing I can say there is if the earnings revisions do come through on HPE, HPE is a better buy at 25 than it is at 21 today. Okay, 20% higher, it's a better buy because that's a better chance that it's going to 50. And so, like, I think, like you said, the proof is in the pudding. We gotta see it play out, and if it's there, then HPE can be a great stock.
Enrique, let's take a minute here for some investor education, because you said something that's really important. It's a conversation I have with the DKI interns, some auction cash in all the time. Sometimes I'll tell them, hey, go research something, come back to me, let me know what you think. And what they'll do is they'll say, okay, do you want me to write up a report? What kind of conclusions do you want? And I say, guys, stop. Do the work, do the research, then let's look at the data, let's look at what we find out, and then we're going to make a decision, right? It's exactly what you said. Don't decide in advance. You wait as long as possible to decide what you're seeing.
Well, and I'll throw one other data point out there. There's 4,000 liquid companies in the U.S. stock markets. Why own companies with negative revisions ever?
Right.
Like, when you can find companies that have positive revisions, when you can find companies that just went from negative to positive, if you can't find a company that just went from negative to positive revisions in 4,000 stocks, the problem isn't the market, the problem's your process. So, we are very results oriented. In many ways, we are quick reactive as opposed to predictive. And, that's been very successful for us.